right, welcome everyone to ActiveProspect's Financial Services webinar, the 2026 Mortgage Lead Gen Reality Check. We're excited to have you with us today. I am Andrew Bailey, a content strategist here at ActiveProspect, and I'm happy to be back moderating my first webinar of 2026. But before we jump into the action, let's go over some quick housekeeping notes. On the right of your screen, you'll see two icons. One says chat, the other says questions. The chat icon is for reactions and general comments. And most importantly to note, I'm going to pin a comment in the chat now for anyone who'd like to continue the conversation after the webinar. There we go. And pinned. The questions icon is where you'll submit any questions you have for our two expert panelists today. We'll try to address some periodically, but rest assured, we've saved some time for a Q&A at the end. Also, we'll be tossing several polls your way today, so audience participation is highly encouraged to help steer our conversation. And if for any reason you have to drop off the webinar early, have no fear, a recording will be sent your way tomorrow. But before we get into it today, I wanted to address the elephant in the room regarding the VMS acquisition at the top. At ActiveProspect, our focus is on maintaining value for our customers and ensuring business as usual. To that point, there will be no immediate product changes at this time. However, we plan to integrate the best of both solutions with input from our customers over time. If you have any further questions, we will drop a helpful blog post in the chat now. Or if you require further assistance, please don't hesitate to contact customer success or at the email also going into the chat. With that out of the way, let's meet the experts that everyone is here to see. Emma, John, tell the audience a little bit about yourselves.
Hi, everyone. My name is Emma Bernstein, and I lead our financial services department here at ActiveProspect.
Yeah, I'm John Henson. I'm an attorney at Henson Legal, which is my firm. And I've been in the mortgage space for close to 20 years at this point, focusing on lead generation.
Both veterans of the space and veterans of these webinars. So welcome back to both of you, and thank you for those introductions. Let's get started a little differently today. And let's start with a quick poll question. First poll going up, which best describes your organization today? Large national lender, regional mid-size lender, small shop independent mortgage company, individual loan officer, or are you just here for the vibes? Please get your votes in now. We'll circle back to the results shortly. While people are voting though, John, when you look ahead to 2026, big picture, how would you describe the current state of the mortgage market and what do you expect throughout this year?
Yeah, I think that there's a couple of interesting things from a macro perspective that are really affecting the mortgage market now, right? One is obviously rates. You have some uncertainty with the Fed and how that's going to be handled. Just the political nature of everything now is being involved in the market, and you're seeing it in rates and with the Fed chair and Powell and the new nominee Warsh. Also, though, I think even though all mortgage and real estate's local, right? But you're seeing 2025 was the lowest year in almost 30 years for home sales. And that directly affects mortgage lenders, obviously, especially when rates are high. And two, it also affects your realtor partners. And that uncertainty, I think, is a real problem. And I think adding to that on the real estate side, you have a lot of regulatory pressure and lawsuit pressure, like Zilla's been named in a couple of big lawsuits around steering and RESPA related to their home loan program. So I think we've been going kind of through this age of consolidation where everybody's kind of consolidating, but now we're seeing how that shakes out in a regulatory environment too. And I think we're seeing it with some of my clients that are lead generators of trying to understand who are my buyers and how do I go expand that buyer pool and who are going to be those buyers in 2026 and beyond.
What you're saying is it's super easy to navigate right now. There's no regulatory issues. It's all fine.
Right. Exactly. This is business as usual.
Business as usual. All right, let's circle back to our first poll results. Blair, if you'll push those on the screen now. Okay, it looks like most people are just here for the vibe, so I'm glad I'm not alone in that category. I'm sure we have a few others here as well. It looks like some small shop independent mortgage companies, so that'll be nice. All right, with those in mind, how should mortgage marketers think about national trends like rates and Fed leadership versus what is happening in local markets? Also, how does the upcoming Home Buyers Privacy Protection Act factor into all of this?
Yeah, I mean, I think that from a national and local perspective, right? I think you're seeing a shift, um, and I'm seeing it in several verticals: insurance, legal services, mortgage. Of like, I want to be available online in the right places for my customer base. And if I'm a smaller shop, like there's a real pivot to local. Like we're seeing a lot of people pivoting to that local, uh, both digital and well, let's call it analog marketing, right? That hand to hand, get out, shake hands, kiss babies type of marketing for mortgage shops is a real thing that I'm seeing with my clients. And then I think you mentioned the Home Buyer Privacy Protection Act that's now in place. I think that people are somewhat positive about it. It's minimizing the trigger leads is what that's doing. So now when your credit file gets pulled, you shouldn't automatically get calls and emails and text from lenders saying, hey, I see you're in the market. One thing that's not going to be stopped by that is when you still get mail after you sign a mortgage, and hey, make sure you get mortgage insurance and some sort of like, I don't want to say scam, but some sort of offer
Yeah.
for products. But then, and there are some exceptions to that law, mostly around like if you're the originating lender or you're the current servicing lender, you can still use trigger leads, but it should cut down on some of that. The other thing consumers don't realize is that if you're shopping online for a mortgage at a online lead generator, this new law is not going to stop that because you've consented to get those calls, right? So that's something you want to think through as well about how that's happening.
Interesting. We actually have a terrific blog post that summarizes what marketers need to do next going into the chat now. But coming back, you've said there are two mortgage markets now. You talked about like how everything's kind of localized. And I like that you brought in the point about analog marketing coming back, which is crazy to think about. I never would have anticipated that a few years ago ever being a thing again. But can you explain what you mean by that and how it impacts organizations of different sizes?
Yeah, I think because the mortgage market is tough now, you'll see smaller players try different things. And sometimes you see them go into lead generation and they struggle, and then they think lead generation doesn't work. But what happens is, one, you're competing against companies, Rocket, Loan Depot, Wells, these kind of companies that like, they have it down to the millisecond of how long they're going to be able to, like how long they need to call you. And it is speed to lead is a real thing.
Yeah.
And when you have smaller mortgage companies that don't have the technical capacity to do that, they get frustrated, and then they say it doesn't work. Well, but it may not be that those leads are bad. It's that you don't know how to work to work the lead. Doesn't mean you can't, but you have to look at, especially early on, you have to look at it as an investment. And there's a lot of companies who are like, oh, I'm going to go buy, a small portion of leads and have, it's a numbers game. So I'm going to go buy 100 leads and I can only talk to 2 of those people. Okay. Like and so therefore it doesn't work, but that's not how this like process or industry works. Like I said, it is a numbers game. You have to go put big numbers in. You don't have to compete one-to-one with Rocket or Loan Depot, right? Because that's very hard for most people to do. But you can compete in your area, right? And you can compete in your zip code or your county and really maximize to those areas. But again, it's not a replacement for systems and processes to handle those leads.
Let's get into our second poll question of the day before we can continue. What do you prioritize most when buying mortgage leads? Lowest cost per lead, conversion to application, conversion to funded loan, compliance, consent, confidence. Again, please get your votes in now and we will circle back momentarily. Jumping back in, this is a question for the both of you. We haven't heard from Emma yet, so she can lead this one. What do you typically see when smaller mortgage companies or individual loan officers start buying leads for the first time?
So something we see a lot is newer buyers, especially buying lists, especially if you think of small independent loan officers. They're trying to bring business in, and a list can feel really tangible. It's like, great, I've got 1,000 leads ready to go in my CRM that I can call. But volume definitely doesn't equal quality, and it definitely doesn't equal intent. So that's where things start to get a little bit tricky. So if CPL becomes your scoreboard, if it's cheap, it feels like a win. But if you're only optimizing for that CPL, you might be ignoring some downstream costs. So time, compliance, and is that loan actually going to fund at the end of the day? So I would always recommend that compliance, while it can feel kind of abstract until you get into trouble with it, really conversion and compliance go hand in hand. And it's something that people should be considering from the very beginning.
Yeah, I would agree with that wholeheartedly. I would also say that there's a tendency to be price conscious on this, and there's a reason that those leads are priced at that price level, right? And so what happens is you want to go in, not commit a bunch of money, a large spend. You may not get high quality leads. This I've seen this dozens of times with what I would call a local retail loan officer who wants to move into leads. That they're used to closing at like 50% or more, right? If they can get in front of you, they're going to close you. And then they go buy inexpensive leads, right? And those aren't going to convert at 50%. They don't even get 50% of them on the phone, right? And so they get frustrated by that. And it goes back to what we're talking about. Like, you have to understand that it's not the same. And how do you make those how do you, I guess, adjust your expectations for this new marketing channel, right?
Yeah, you truly get what you pay for in a lot of ways in this. Let's circle back to those poll results really quickly. Blair, push them on the screen. There we go. Okay. Okay, so 34% conversion to application, a balance between conversion to funded loan and compliance, consent, confidence. Nice. I like to see all that. Normally don't get our answers so spread out. So excellent. With those in mind, Emma, why does focusing on the cheapest leads often end up being more expensive in the long run?
Yes, I think I would also say that not all cheap leads are quote unquote bad leads, but it's really, what are you looking to get out of it? What is your process? What can you handle? And I think for people in the mortgage space, it really comes down to who is the lead vendor that you're working with and where have those leads come from. So you should be able to have a conversation with whoever you're buying leads from. Again, not just getting bulk list names off of who knows where on the internet, but work with somebody that you trust. I would generally say trust, but verify what they're saying. And if your lead seller cannot tell you the sources that they're getting their traffic from, at least in general terms, and if they can't show you what that consumer is going through, what does that form look like? What does the consent language look like? What does that customer journey actually look like? If they can't or won't explain that, that's a big red flag. So really, if you don't know where the lead's coming from, you're opening yourself up to quite a bit of risk, both on the regulatory and just the reputational side.
Yeah, it would be impossible for me to agree more with that sentence. I like to tell people that when you're buying leads from a company, you're actually buying their compliance program, right? And how confident are you in that lead source's compliance program? You have to understand where the leads are coming from, what the consent language says, because the consent language is the key. That's the key unlock across the board, right? And for so many areas, not just TCPA risk, but also like, what can you do with that lead in the future? How can you call them? How can you contact them? What can you contact them about? Right. And the fact that just, again, they don't necessarily convert poorly. I was at LendingTree for years, and we had lenders who crushed on cheaper leads, like just absolutely did great conversion rates on those cheaper leads because they knew what they were doing and they knew how to handle them. And people building multi-million-dollar companies based off those leads. So the one thing that I think is probably underappreciated is, again, if you don't know how to handle those leads or don't know how to process and work those leads, and I think Emma mentioned this earlier, there is the time value of money is a thing, right? And like, you're wasting time on poor leads if you don't know how to convert them. So, but God, Emma could not be more right about, you have to know where those leads are coming from.
We have a question here I want to pull up right now that just came in from an anonymous user. Biggest issue I face with mortgage brokerages is lack of outbound effort. What can we do to set the right expectation and possibly find the solution?
That's a great question. And, I have seen in the past things that have worked where companies have come on to buy leads. You would think from looking at this company, right? They should do well. They don't perform well. They get frustrated. And then, we've had partners go in and say, look, compared to lenders who do well on this network, right? We have 10 things that are best practices and you're doing 3 of them, right? Mm-hmm. So like you have to be able to show with data, hey, random example. If you're based on the West Coast and you're getting leads on East Coast time, but you don't call them until 9:00 in California, those people are gone. Like it's lunch, right? Yeah. It's lunch on the East Coast and they haven't even thought about it anymore. So like, just maybe by opening those call center hours a little longer, right? Or maybe not buying leads until Pacific time, right? So you have to be able to show them something tactical that they can do or implement fairly easily to get them to buy in and make some adjustments. Because I would say the majority of people that I have seen struggle are doing, a handful of the same things wrong.
Yeah, I would completely agree with that. I think it's, to John's point, it's about partnering with your lead buyers and showing that you are a trusted partner and you're there to help them be successful. At the end of the day, if they're closing more of your leads, they're buying more of your leads. I worked with lead sellers in a previous life, and we would go as far as secret shopping our clients once a month. Yep. And we put in a series of 3 leads that we didn't charge them for, and we monitored how quickly they called back, how many times they called back, how many voicemails they left, and how many emails they left over a period of a couple of days. And then we would send them those reports. And half the time, they didn't even realize that there was something wrong. They'd come to us letting us know that their opportunity rates were completely out of whack. But actually, it took them 6 hours to call the first lead. They didn't call the second lead, but they called the third lead within a minute. Sometimes it's a tech breakdown. Sometimes it's a people breakdown, but kind of getting under the hood and understanding what's actually going on. But setting that relationship up from the beginning of you're not there for like the gotcha moment. Yeah. You want to make sure, especially from a consumer standpoint, if you're generating the leads, that consumer is expecting, hopefully, to hear from somebody. And it's not a great experience for them either if nobody's calling them back.
Yep. To that point, there's another question here I want to address before we continue. Should your lead providers be licensed?
Depends.
Spoken like a true attorney.
Yeah. I mean, I think it depends. I think it depends on what kind of leads you're buying. There are, last time I had to look at this, there's 3 states that says any lead generation have to be licensed. You can make those decisions based on your risk profile. I would also say that depending on the information you're getting, like if you've ever talked to me before, you've heard me say everything is a spectrum, right? And so like there's different kind of leads. There are clickouts and there are like full-blown, full data, credit score, all that good stuff leads. The closer you are to clickout, probably the less important it is to be licensed. And the closer you are to full-blown all-in leads, like you probably should be requiring licensure.
Okay, thank you for that, John. I was glad you didn't just leave it at it depends, because that's what I'm kind of used to.
Yeah, and again, your mileage may vary and all that good stuff.
Yeah, for sure.
Contact your local tax professional or whatever I'm supposed to say.
So we've talked a little bit about consent and compliance throughout the discussion today, and now I really want to hone in on that more. But first, let's gauge the compliance confidence of our audience with our next poll. I told you there were going to be several today. So how confident are you that your current leads include consent that actually covers your outreach? Very confident, somewhat confident, not sure, still here for the vibes. We're auditing now, and we'll return to these results shortly. But speaking of compliance, potential pitfalls specifically, Emma, where do you see mortgage companies and loan officers unintentionally opening themselves up to TCPA risk?
Yeah, so I've got a 4-point answer here. First is assuming that the seller handled lead compliance. We see that all the time across every industry. Mortgage isn't specific to this one, but it's the, oh, well, somebody else took care of it. They said they took care of it. and again, trust but verify. Then not reviewing the consent language. So a lot of the teams are never actually looking at the consent language that's connected to their leads. And if you don't know what the consumer agreed to, shouldn't be calling them. Third thing is the one-off dialing and texting. Sales teams are bad about this. I say that as a leader of a sales team and a salesperson myself. It can be really tempting to do that, like just following up call or text. But all of that is regulated outreach. So if you're doing that outside of your system, you've really got to make sure you know what you're doing. And then piggybacking off of that, not having any system of record. So if you can't prove consent later, it's almost like it never existed. So making sure you have a system like Trusted Form, of course, that stores that consent language should you ever need it.
Yep. I would add one thing to that, Emma. I'm seeing a lot of, I'm seeing it in mortgage, I'm seeing it in insurance, I'm seeing it in real estate, that let's call it the mothership company buys leads and it goes into a pool and an agent calls or a loan officer calls out, right? Calls the consumer, hey, Emma, this is John. And Emma says, hey, I'm not interested. Don't call me back. Please take me off your list. John hangs up, doesn't disposition that correctly. And Emma goes back into the pool. And then Andrew calls Emma. And now you just set yourself up for a DNC problem, right? So not only is it important to make sure that, you know, you've got the right consent language, but you've got to handle those DNCs correctly. Have to handle it. I would say that is probably the riskiest area we're seeing right now in TCPA.
I love that I'm the one making the DNC violation in that scenario as well, John. So thank you for that. Emma, what are the biggest misconceptions around consent that you're still seeing today?
I think the biggest is probably that a form fill equals a consented lead. A lot of people fill out web forms and they still don't exactly know what they're doing. Even in 2026, they are shocked sometimes when they get a call or a text message. And that's really where the consent language matters. It needs to be clear, conspicuous. How are you going to call them? Who is going to call them? What type of technology is going to call them? And if you don't have all of those things present, you can definitely get yourselves into trouble. So not all leads are created equal. Not all form fills should be contacted.
With that, let's go ahead and circle back to the results of our most recent poll. We'll see who's still here for vibes. Seems like most people are now. I like to see this. And although no one selected that they are auditing now, I did want to address this question before we continued. How can teams audit consent without slowing down sales should they choose to do so?
Yeah, so I'm a little unsure what part that means, so I'll answer it two different ways, right? So if you're talking about like onboarding a new lender, you've got to get screenshots of their current process, current flow from add to submit, and you got to understand that you got to make sure you understand that flow the entire way. Like to Emma's point, I'll be honest with you, I have audited lead generators within the last 6 months that they collected all the information. It went to the page, the phone screen, and then the submit button. But they were selling the lead as soon as they filled out the form, right? So you've got to say, hey, at what point do you sell me this lead, right? And then you review the consent language there. That should go on during your onboarding process. Now, if you're talking about consumer consent, like while they're in the system, and how do you audit that? Again, you've got to be able to track, Emma filled out the form on this website on this day. And because we have audited that prior, we know that we have consent to call her, right? And when we go put her back in the pool to dial, we know that consent is still good. So, onboarding is really important here, especially of any new lead vendors.
Keeping the focus on proactive approaches, if someone is buying mortgage leads for the first time or the 100th time this year, what should they evaluate first? Would it be that onboarding process or something else?
Yeah, I think the first thing to understand is, what are they selling me? Are they selling me mortgage leads? Are they selling me co-reg leads? Are they selling me leads that, I had a call with a client this morning that they're in the insurance space, and he's like, this the leads aren't even coming from insurance site, and it just says, they said they put me on a partner list, but I'm on the partner list with 5,000 other people, and it's on a car loan website. And he's like, that's not right. I was like, that's not ideal. Like, what are they selling you? Are they selling you financial services leads? Because we want to make sure that we're doing certain things there. Are they selling me mortgage leads? Good, because I want to be able to then go see my consent.
Yeah.
And what is the customer consenting to, right? I like to say that this is pretty easy. It's a two-step process, right? Tell the customer what you're going to do, and then go do that. And if I say, by clicking this button, you will receive calls from my financial services partner about your request, great, then do that, right? But if it just says, by clicking OK, you're going to get marketing calls about what, right? And I see that a lot, that they use that general language, and then it's on like I said, a car insurance website. I can make the assumption that I'm going to get calls about car insurance. But if I get calls about final expense insurance, that's completely different, right? And I would have never wanted that call.
Yeah.
The other thing I say a lot, which is connected to that, is you want to avoid what the heck moments, right? Like, the consumer should never have an experience that they're dealing with the lead generator or you, that they end up saying, what the heck is going on? Why are you calling me, right?
Yeah. You don't want to look like Drake May in the Super Bowl. You just don't want to be thinking, what the heck, the whole time.
You don't want to be seeing ghost.
Exactly. If you go to any lead gen conference right now, AI is still the main topic of most conversations. At this point, I think it led SportsCenter last night. It is exciting, especially for smaller teams and loan officers who want to level up. But specifically, how can AI actually help, and where does it start to create risk?
Yeah, I think I have a lot of clients that are using it. I have a lot of clients that offer AI voice as a platform. And there's two ways to do AI voice, right? There's inbound, right, which is just like a fancy IVR. That's pretty low risk. There's a few things you have to think through with that, but not as many. And then there's outbound, right? And outbound AI voice is doable, right? It's doable compliantly, but there are some additional rules and regulations that don't just apply, that don't apply if you're just picking up the phone and dialing. And one of the biggest things I see, and this is why I say consent is so important, and Em and I have both talked about consent, is if your consent says, I agree to get marketing calls to this number about mortgage, great. That is arguably not enough for AI voice, right? You want your consent language to specifically reference AI voice. And this is why it's so important to track the consent language of your partners and to track where those leads are coming from, and being able to tie lead one back to website A, right?
Yeah.
Because I know that lead one saw the consent language on website A and it says AI voice. Therefore, I can call lead one. But if I got lead two from website B that doesn't have that AI consent language, I want to think through the risk of doing that, right? So that is, again, it's very doable. Most people, it's a small change on their form to get the right consent. The other thing is that if you do use AI voice, there are some, like I said, there's some additional disclosures that have to be in the call. I like to tell my lead generation, like my lead buyers, that when you're talking to an AI voice provider, ask them about their compliance. They don't have to be able to quote you chapter and verse, but they should be able to say something more than we're compliant.
I think that does a nice job of also answering this question we received shortly ago. The question was from an anonymous user that says, can you please talk about ringless voicemail and AI voice outbound calls and how to properly and legally set these up, if possible, for when we are generating our own leads? Is there anything else you'd like to add to that, or you think you summed it up already?
Yeah, I mean, I think both of those, ringless voicemail and AI voice, are essentially the same thing from a TCPA perspective.
Okay.
So you just want to make sure that you've got those right disclosures and that you're setting it up correctly.
Okay. Awesome. Thank you. Emma, where are you seeing the biggest risk from teams adopting AI too quickly today?
Yeah, so Andrew, you kind of mentioned the lead gen conference circuit, and it is
Mhm.
the biggest of topic of conversation. Half of the booths, half of the panels, half of the sessions are all about AI and how we can use it to be more efficient. What's interesting is I'm seeing more and more people that are eager about the optimizations that they can make, but really hesitant from what are the implications of this? How do we set it up correctly? How do we not get ourselves into trouble? John and I have kind of gone back and forth on a bunch of different ways. Make sure you're doing this when you're buying leads and how to make sure that leads are quality before you get them. I would say the first thing is don't like throw bad after bad. So whatever you do with AI, you are just going to amplify the process that you've got in place. So if you are buying cheap leads where you don't know if they've got consent and you're not really sure what traffic sources they came from, throwing AI at that is going to create a massive headache. Things are going to get even worse. So the first step of that is make sure you've got good quality, compliant leads in the first place. If you're thinking about implementing AI, definitely talking to those providers about what they're doing, like how are they compliant, how does that work, and ensure that that's something that you've audited. I would also say, like John had a really good point, if you want to limit those what the heck moments by the consumer, it's still AI. Most people can still tell that it's AI, and if it's done correctly, maybe that doesn't bother somebody. But just keep in mind that if you've got really aggressive follow-up processes, or if it feels really impersonal or mistimed, that's going to impact brand trust. And that's kind of a slippery slope to somebody becoming really aggravated and sending you into compliance risk.
Yeah. And I would say too, you know, I have over the last couple weeks had multiple conversations about spam likely problems on phone calls. And like spam likely, I like to explain, is really just reputation management for your phone number, right? It's the carrier saying this phone number does a good job on calls, therefore it's a good phone number, versus this phone number has a lot of fast calls, a lot of short duration calls, a lot of no pickups, and they're blasting the same number as over and over again. Guess what AI is incredibly good at? Short duration calls, blasting the same numbers over and over again.
Yeah.
So, like, I have seen numerous people over the last, like I said, few weeks who have implemented AI voice in a, as Emma said, not in a thoughtful way. They're just doing bad practices faster. And it's led them to some real reputation problems on their phone calls, right? So that is one thing to think through as well.
Spam likely is also why John stopped answering my calls, so it's fine.
That's right. That's right.
Before we move on, I want to address two questions here. Producer Blair, don't kill me for this. They kind of tie into each other. So both come from anonymous users. One question is, any concerns with AI agents? And the other question is it cost effective to help clients set up an AI agent as well?
Client being lead buyer.
I would assume so, yeah.
Yeah, potentially. I mean, so if you know that client is going to do it in a way that is compliant, probably. The thing that would give me pause, honestly, is like helping a client helping them set up their AI voice. They get sued because they've screwed something up, and then they come back to me and say, "Hey, your indemnification says that you'll pay this lawsuit for me. Thank you." Right?
Yeah.
Again, it's the reverse of what we talked about earlier, right?
Mm-hmm.
So like, not only is the lead buyer buying your compliance program, at that point you're buying their compliance program that they're not going to screw this up and take you both down. AI agents. I mean, I think we talked about AI voice. I use AI voice and AI agents interchangeably, but that's. I think it obviously is super helpful in certain areas. I have clients that have had great success with it on the insurance side, both outbound and inbound. So it is the big mistake that I see people make. And Emma and I had this conversation at a conference, was people are buying the shiny new tool. They're implementing it without thinking about it. And they're like, we're in such a rush to get it implemented that it's the old saying, right? I'm in such a hurry to know that I can do it.
Yeah.
I haven't thought about whether or not I should do it, right?
That, and again, that addresses another question we had in the chat that came through, was what controls should be in place before using AI voice or dialing. So I think that took care of that as well. Emma, how can technology help mortgage teams use AI responsibly without slowing them down? It's kind of a funny question, asking how technology can help technology.
Yeah, I think this also goes back to the previous point of how do you verify consent without slowing down the sales process? So it's how do you make sure that technology is making you more efficient, but not getting you into trouble and not causing more headaches than you might already have? So I really feel like the right technology is going to create that structure for growth. And that's how you should use it. And that's how you should think about it. From an ActiveProspect standpoint, that is where the combination of trusted form and lead conduit really shine. So trusted form is making sure that your leads have documented consent. You're using trusted form verify to make sure that the consent language on every single lead is the consent language that you're expecting on those leads. And then pairing that with lead conduit to do real-time decisioning, maybe even appending data, filtering out duplicates, scrubbing against a known litigator list, and making sure that the only leads that even reach your team, well, by the way, all of this is happening in real time, the only leads that reach your team are quality leads where you're confident in the consent and where they've come from.
John, how does all of this tie back into list hygiene once leads are already in the system?
Yeah, I think that the importance of list hygiene, I talked about earlier that DNC claims are like the biggest area of risk right now in TCPA. And that all ties back to list hygiene, right? And the last year, the FCC said you're going to have to honor all reasonable revocations. And whether that's over the phone or whether that's through text message or whether that's in response to an email or whether a new email, right, gone to customer support at activeprospect.com, right, or whatever. Is that a reasonable request? The problem with that standard is it's up to you as the caller to prove that it's not a reasonable request. That is proving a negative, which, as we all know from math, is very hard, right? So like the issue there is when I like to say, everybody knows when someone says, "Don't call me again," that's a DNC, right?
Yeah.
What about your prices are too high and they hang up the phone? Is that a DNC? Maybe not. Maybe they just didn't like your price, right? And it's handling those, what I call non-standard requests, right? I got a response that may or may not be a DNC. How do we handle that? And you have to have a way to do that, and somewhat quickly, because when the FCC changed the rule last year, they shrunk the time down from 30 days to 10 business days. So you've got 10 business days to make sure that person is properly off your list if they've requested it.
So how are people tricky too with AI, can't it? Like if AI is making the calls and then doesn't know how to process the answer.
Yes. So that is what I was about to say. So how are people handling it, right? There's a couple ways to do it. One is a lot of people are relying on AI to do it. You know, you could build a list of things that I'm going to consider a reasonable request. I'm going to upload it to my system. If the system hears those things, they'll put them on the DNC list. I have other clients who have done something similar, but with a smaller list. And if they get a non-standard response that the system deems negative, right? Whatever that means, they go on the DNC list, but then those are manually reviewed, right? And so what that does is it allows them to take them out of the cadence, right? So they don't, mistakenly get called again until a human can go in and say, actually, she just said, don't call me back because my prices are too high. We should probably call her back in 6 months or provide her another offer, right? And so that manual review there's still a need for it in certain areas, but you've got to figure out how do you make sure that whatever system you're using, whether it's manual, whether it's AI or anything else, is flagging those correctly so you have time to review them.
All right, let's get some final thoughts out there before moving to our Q&A section. And if you could give one piece of advice to a mortgage marketer heading into 2026 or throughout the rest of the year, heading into 2027, what would that be? John, since you're our honored guest today, let's start with you.
I think if you're planning on buying leads, you got to know, like Emma said, I'm going to steal her answer probably. You have to know where your leads are coming from. Like you just have to. And you have to know what consent language the consumer is seeing. And I had somebody tell me one time that like, oh, I can't show you where I'm getting my leads because that's my secret sauce. There is no secret sauce. Like we're all doing the same thing. Different versions of it maybe, but like you still have to be able to show the consumer where it's coming from.
For me, it's really don't let the maybe temporary joy of a quick win from buying a bunch of cheap leads or importing a giant list into your CRM and then throwing the newest AI tool out at it. Don't let that kind of cloud the bigger picture of your brand risk, compliance risk, and ultimately just making sure that the consumers are getting what they're actually looking for and creating a good experience. It is so easy, especially when the market isn't in the best place, to say, great, we're going to get some quick wins from this. We're going to get some new business from this. This is a great new tool. They've promised us all these things. And then just rush through the buying process and the implementation process of those new leads or those new tools that you aren't doing your due diligence and making sure that they're set up correctly.
You haven't gotten your questions in for John and Emma yet. There is still time. Just be sure to use the questions tab on the right. All right, we have a couple more we haven't addressed yet, and let's get started with this one. Where are you seeing the biggest disconnect between national market data and local realities? From an anonymous user.
Yeah, I think that that's a really good question, by the way. We all get sucked into the national news narrative. And when I actually heard the stat that 2025 was the lowest year in the last 30 for new home sales, I actually sent that to my wife, who runs operations for the biggest real estate company in the state here. And she said, we're up this year. And it's all real estate's local, right? And that's why I point that out, is because first of all, I also know from experience that like I live in Birmingham, Alabama, we are about 6 to 9 months behind national averages. So we will feel the effects of that later this year, probably, unless something changes. But it's just understanding that in your area, understanding that data in your area, and being able to spot that and having a guesstimate of, okay, so historically we're right in line nationally, or we're ahead of the nation, or we're behind nationally. So, it's the great thing about averages is that half the country's worse than that. So.
Okay, jumping into our next question here, also from an anonymous user. What mistakes do smaller lenders make when they try to copy large lender playbooks?
So that's
some good questions today.
Yeah, that is a good question, and I have a couple of thoughts on that. One is that everybody thinks that playbook is the playbook, right? So like we'll pick on Quicken, or excuse me, Rocket. The Rocket playbook is the Rocket playbook. Period. End of sentence. And like they have thousands of people dedicated to squeeze percentage points out of their leads, right? Like if they get 0.1% better, that's a huge amount for them. That is not necessarily the play for everybody. So you have to understand what you're trying to accomplish and what you want from a marketing channel. Are you trying to build brand recognition? Are you trying to build, maybe your better play is to go spend time, shake hands, kiss babies with, realtors, right? So thing one is not everybody's playbook is the same. Thing two is they think, and I've seen this before, and it's somewhat related, right? Like the technology that you have is not the technology they have. And because of that, you may be at a disadvantage.
Yeah.
I'm not saying you are, but you may be. But again, you're going to be at a disadvantage if you're doing their playbook. But your technology may be perfect for the playbook you want to run. I mean, I can tell you that there are, like I said earlier, there are lending businesses built off the scraps that other lenders didn't want, right? And we used to always call it chicken salad at Lending Tree, right? Of like, there's the chicken, there's the celery, there's the mayonnaise, and there's something in there for everybody, but you got to figure out what part of that you want.
It's like you can't just run your offense with any quarterback. If Rocket Mortgage has Tom Brady and you have a high school quarterback, you got to operate to your abilities at that time.
Right.
So jumping into another question here, Emma, this one is for you from an anonymous user. Does Trusted Form verify that my company's name is on the lead provider's TCPA list? How long is the Trusted Form certificate stored by ActiveProspect?
Yes, so that is a functionality within our Trusted Form Verify, very aptly named product. And we store the certificates for 5 years, assuming that they are retained. So you need to make sure that you're retaining the certificate in your account, and then we store them for 5 years.
Thank you for that. And the last question here actually came in via the chat. I'm not going to try to pronounce your last name. I apologize. I would do it no justice. But from Iffy here in the chat, in an audit, who is responsible for consent records?
Yeah. So that's a great question. And Emma somewhat touched on it, right? Like under the TSR, which is the telemarketing sales rule, which is similar to the TCPA, the seller, right? So the end, it's defined as the seller, but it's really the end lead buyer, the person who's calling the leads, right? And trying to sell a product is going to be responsible for maintaining those consent records. Now, you can agree that, hey, lead buyer, I'm going to buy these leads from you. You're going to keep those for me. You can contractually agree to that, but it's ultimately that caller's responsibility. Now, where do you keep it? You can keep it in Trusted Form. You can keep it in a CRM system. You can keep it lots of places, but you got to keep it, right? The other thing that we see, that I see people make a mistake is they have it in a system somewhere, whether that be Trusted Form or their CRM, and they don't know how to export it when they leave that system, right? Because for whatever reason you changed, you have to be able to take them out when you leave, because all those systems don't want to hold those for 5 years. So like if for some reason you left Trusted Form, which I don't know why you would, but if you did, then, I think you have 90 days to get it or whatever it is in the contract. So make sure you're able to export it if you need to.
Okay, I lied. One more question. This one just came through from an anonymous user. I think you both would have some insight into this one. How can I coach prospects to becoming clients in a way that isn't forced? I have many prospects I had to turn away due to lack of speed to lead, and the brokerage system might be repetitive, but what kind of conversations get these brokerages to level?
Coach clients in a way. Lack of speed. That's a good question. I think that it's almost done up front, right? Of like, hey, here's the challenges you're going to have, right? Now, so you have to be able, everybody's in sales, even lawyers. And part of sales is overcoming objections, right? So you've got to say, hey, I need you to know that you're not Rocket, right? So your speed to lead is not going to be as high as theirs, or whatever the pain point is. Because of that, this is how you offset it, right? And you've got to be able to clearly articulate that, whether that's, I know there was one company that we used to deal with who would not call the first day. They would call like 3 days later, right? And because on day 3, that person is tired of talking to the Rockets of the world or whoever, they've told them don't call them back. And so now on day 3, the person's like, hey, I know you got a lot of calls. I know you've had a lot of calls over the last few days. You may have already gone with somebody. But if you haven't, I would love to be able to take a chance to give you a quote, see if I can be competitive or not, right? And that loan officer crushed it. I mean, just did so good on it. Had a very high contact rate, had a very high conversion rate based off this contact rate. So like, there's definitely ways around it. But again, sometimes it's thinking outside of the box, right?
Yeah. I say waiting 3 days to call was like my high school dating philosophy, but I did not crush it. I can assure you of that.
Your
That's
contact
gonna
rate,
wrap.
your conversion rate was terrible.
Conversion rate was terrible. Speed to lead, awful. That's going to wrap it up for us today. A huge thank you again to John for taking time out of his busy schedule and for joining us today. If you do not subscribe to his newsletter, as a subscriber myself, I highly recommend doing so. And thank you to Emma for putting in so much work on the back end and bringing all of this together. And to producer Blair, behind the scenes, the hardest working woman in the webinar business. Lastly, thank you to all of our incredible industry subscribers and to everyone who showed up today and actively participated in the discussion with poll responses and questions and really kept the vibes high. If you'd like to continue this conversation, please reach out to us via the pinned comment in the chat or by answering our latest poll. We'll be back in the coming months with our next webinar, and although it is not yet scheduled, we hope you'll join us then. Again, I'm Andrew Bailey. Have a great day. Keep the vibes high, and we'll see you soon.